Hello everyone, welcome to Options with Doug, streaming live daily on Bookmap Discord and the Bookmap YouTube channel at 1:30 p.m. Eastern Time. Before I get started, I need to go through the disclosures. General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure, trading futures, equities, and options involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. Here's my contact information. The best way to get in touch with me is through Discord. My name on Discord is Doug P. Also on Bookmap Discord, there's an Options-Doug chat channel. That's a great place to post questions, comments, and content related to the topics of my presentation and the topics of the channel that I'll go through in just a moment. And I'm also on X, formerly known as Twitter. My name there is @DougPless. Here are the key tenets of my approach to trading. This is the basis of my approach to trading. First of all, I believe options trades and market maker hedging activity are key drivers of price of many stocks. And SPX, for the S&P 500, SPX is the underlying index. SPY is the ETF version of that index, and ES is a derivative of SPX and SPY. And so when traders buy and sell puts and calls in SPX and SPY, market makers take the opposite side of those trades and they hedge their delta exposure with ES futures. And for the Nasdaq 100, NDX is the underlying index. QQQ is the ETF version of that index. And NQ is a derivative of NDX. So when traders buy and sell puts and calls in NDX and QQQ, market makers take the opposite side of those trades and they hedge their delta exposure with the NQ futures. The focus of my presentation today and the focus of the Options-Doug chat channel is options order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is planning, and I use positional analysis. I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as the directional bias. And the second step in my process is execution. I look at real-time order flow in Bookmap and real-time market maker hedging flow in Spotgamma Hero to confirm my thesis, and for setups. And when I talk about setups today, I will be focusing on an underlying asset. For example, for the S&P 500, setups can be taken with ES futures, SPY shares, SPY options, SPX options, or even ES options. Questions and comments are welcome, and I will be watching both the Options-Doug chat channel in Discord as well as the chat and YouTube for your questions and comments. Please feel free to post. I'll do my best to answer your questions. Hello Sheena, welcome, glad you're here. Here's my agenda for today, Thursday, March 14th. First of all, I want to go over news items for today as well as the rest of the week. And then I'll cover my positional analysis for today. Then I'll review some setups from earlier today. Then I'll take a look at the live market. And when I get to the live market, if anyone has any stocks they want me to take a look at, please let me know and I'll be glad to do that. All right, so let's start with economic data and events for today. There were a couple of important data releases today. PPI data and retail sales at 8:30 a.m. Eastern Time. Here's the results. And it looks like PPI came in greater than expected, so hotter than expected. And it was kind of mixed with comparison to the previous number. It looks like core came in line or a little bit less, and the non-core, whatever you want to call that, came in greater than expected, greater than the previous. And retail sales came in positive, greater than expected, Actually a little bit less than expected, but greater than previous. All right, so that was the data today. Then tomorrow is the big options expiration. That is the monthly options expiration. It's also a quarterly expiration. Excuse me, and typically the quarterly expirations are the largest expirations: March, June, September, and December. All right, so let's take a look at the expiration concentration. And this chart is showing market makers delta notional on the vertical axis by expiration date on the horizontal axis. This is the March expiration coming up tomorrow. Orange bars are showing call delta or positive delta. Blue bars put delta or negative delta. And it's very obvious that this is a heavily call dominated options expiration. What can typically happen on a call dominated expiration, all those calls that have been stabilizing the market, a lot of the calls that have been stabilizing the market expire, and there's typically consolidation or some weakness after a call dominated expiration, and certainly volatility should expand after this call dominated expiration. All right, and note this chart is showing delta notional for the S&P 500, Nasdaq, and Russell 2000. So that's a combined chart. All right, so that's the options expiration tomorrow. All right, let's take a look at charts now. This is the S&P 500, ES futures and Bookmap. So not really much of a reaction to the data release at 8:30 a.m. Eastern Time. Down then up. And resistance at the SPY 518 level and also the ES 5250 level. All right, before I take a closer look at this chart, again, this is ES futures and Bookmap. Before I take a closer look at this chart, I want to step back, look at a larger time frame. I'm going to go to the underlying index, which is SPX. So we're moving on to positional analysis now. So we know the reaction to the news was somewhat muted compared to the overall reaction after the cash open. All right, so this is the current rally that began last year, October 30th. SPX, since October 30th, has rallied up over 1,000 points, about 1,080 points. So that's a one-day chart, and think or swim. Now let's take a look at a 1 hour chart, just to take a look at the top end of this rally. So that's the trend line that began again October 30th last year. The high for SPX right around 51.89. All right, let's take a look at the levels on this chart. And note during this year, 2024, the SPX call wall has moved up from 4,800 to the current level at 5,200. More about that in just a moment. All right, let's zoom in on this chart just a bit and focus on the levels on this chart. First of all, the dashed purple lines, and I'm talking about this upper one here. That's the lower and upper weekly expected move. This is another line that I'll talk about in just a moment. All right, so the purple dashed purple line is lower and upper weekly expected move. That's based on the closing price for SPX on Friday. I get the range, expected range for the coming week. These levels remain in place for the entire week. They do not change during the week. And then the dashed blue lines are showing the lower and upper daily expected move. This is based on the closing price yesterday, and these lines do change every day. And I post all these levels in the Options-Doug chat channel and in Discord, Bookmap Discord, the evening before. So yesterday I posted these levels are right around 6:45 Eastern. All right, so it looks like SPX is has tested the lower daily expected move for today. All right, the yellow levels on this chart are Spotgamma levels. These are proprietary Spotgamma levels that are provided to subscribers, Spotgamma subscribers. They're available on a variety of trading platforms. Again, this is Thinkorswim, a 30-day, 1-hour chart. I'm going to point out the key daily levels. So first of all, here's the put wall. That's a strike with the largest net negative gamma. That's at 5,000. And that level can be expected to act as support. And note that level did move up from yesterday, from 4,800 yesterday up to 5,000 today. The next level up is the volatility trigger, VT. That is Spotgamma's proprietary volatility flip level. Below that level, market makers' position on the gamma curve is negative. In a negative gamma environment, market makers have to trade with price dash their delta exposure. That tends to enhance or increase volatility. Above that level, market makers' position on the gamma curve is positive. In a positive gamma environment, market makers have to trade against price dash their delta exposure, and that tends to subdue or decrease volatility. And note that SPX is trading above its volatility trigger. The next level up is 5150. That's the absolute gamma strike. That's a strike with the largest absolute positive and negative gamma. So that's where most of the gamma weighted open interest is concentrated. And that level moved up yesterday to 5150 from 5,000. It had been at that level for quite some time and still now remains at 5150. Then finally, the call wall remains at 5,200. That's a strike with the largest net positive gamma, and that can be expected to act as resistance. So potential floor for price at 5,000, potential ceiling at 5,200. All right, so the only shift in level for the SPX was the put wall shifting higher to 5,000. All right, Anurag, hello. Welcome, glad you're here. Ask, what were the green and red horizontal bars in the daily analysis? I'm not sure what you're talking about. Are you talking about this chart right here? If so, this chart is showing I've got purple, blue, and red lines. The magenta or purple, that is the lower and upper weekly expected move. And the red lines are the blue lines, lower and upper daily expected move. Red lines are the Spotgamma levels. All right, Anurag, I'll get to that. I'll get to examples in a few minutes. All right, so in the SPX daily chart, all right, we can take a quick look at that. SPX daily. All right, so there are no green lines here. Oh, these lines, I guess you're talking about these lines right here. This is part of an indicator that I have. I got that from somebody else. I actually use that for the weekly expected move, those small lines, and that is something that I got from another organization that it's not mine to share. So that's what I use for that's where I get the weekly expected move from those lines. A little bit different calculation. All right, so I hope that answers your question. All right, let's wrap up our view of SPX. Go to a 1-minute chart here, showing a couple days worth of data. This is this other line that I've drawn on the chart, this 5160 level. That is SPX 5160. That was noted as support in the Spotgamma M Founders Note. I find that quite often those levels noted as support connect as resistance and vice versa. It's just a key level that is not shown on the chart here, but it is acted as resistance. And note that SPX did trade below its lower daily expected move. And then also here's the 5150 absolute gamma strike. And there was a lot of price action above and below that level, but making a series of lower highs and lower lows until finally breaking below that level and continuing on down toward the lower daily expected move. All right, let's get to Bookmap now. So on Bookmap, I have my own cloud notes. So I can show SPY levels. There's that 518 level that acted as resistance right after the data release this morning. 517, good entry point for a short at the cash open. That's a large gamma 4 level. I also have SPX levels on this chart. There's that 5150. That's the absolute gamma strike. That was also noted as support in the Spotgamma M Founders Note. And note before I mentioned that price had oscillated up and down around that level quite a bit. You can see the concentration of volume up and down around that level. That's shown in the session volume profile. Also the point of control, shown with the dark purple solid line there. But again, price did finally break below that, also below the lower daily expected move for ES. And I do calculate that separately from the lower daily expected move for SPX. All right, so range for today, just around the 518 levels, 518 level above, and the SPY 513 level, also the ES 5200 level below. All right, so those are the levels in play for today. Note there is a difference in price between ES and SPX. This 5150 SPX level, I'm actually showing that at ES 5215. So right now the ES to SPX offset is about 65 points. And note that does widen. It's at its widest right at the contract rollover. So I am using the June contract now, and that level has started, that difference, price offset, started about at 66 points today and earlier this week, and now is at 65. So that will gradually reduce as the June contract moves closer and closer to expiration. And I do post those index relationships that I'm using in the options-chat channel on Discord every day. I post the preliminary numbers and the final numbers. All right, so that's the SPX, S&P 500 levels in play. Let's move on to Nasdaq. Shifts in levels, again, I mentioned for SPX, put wall shifted higher, and for SPY, the volatility trigger shifted lower, and the absolute gamma strike shifted higher to 520. So kind of a mixed picture for the shifts in levels for the S&P 500. All right, here's Nasdaq, NQ futures and Bookmap. Let's take a quick look at the underlying index charts to see the levels in play for today. This is QQQ. All right, QQQ is, let me point out some of the key levels. This is the volatility trigger, 438. Acting somewhat as support this morning, kind of a lower bound. 440 is the absolute gamma strike. And note this 440.66 acted as pretty solid resistance earlier today. That's a combo 3 level that combines QQQ and NDX gamma weighted open interest into one level, here converted to an equivalent QQQ price. All right, so those levels in play for QQQ, and for QQQ the volatility trigger did shift higher to 438. All right, let's take a quick look at NDX. Zoom in a bit. So this is interesting. The put wall for NDX is now at 18,000. So it moved up from 17,500 yesterday up to 18,000 today. And note the call wall is actually below the put wall at 17,750. And 18,000 was also the absolute gamma strike. That level did act as support earlier today. Right, so now, according to this, Nasdaq is trading just above the put wall for NDX. So there's that NDX level right there. And there is an offset between NDX and NQ. Currently it's about 250 points. So I'm showing here in my cloud notes, I'm showing NDX 18,000 at NQ 18,250. All right, levels in play. Again, I've got my own cloud notes so I can show QQQ levels, NDX levels, and then key levels for NQ. NQ traded close to its lower daily expected move, not quite there. Levels in play for today. QQQ 452 on the upside. Also this NDX 150 level on the downside, close to the lower daily expected move for NQ, also the 18,200 level. All right, so those levels in play for the Nasdaq. Again, for QQQ, volatility trigger moved higher, put wall moved higher above the call wall, and the volatility trigger for NDX, for the NDX, put wall moved higher above the call wall, and the volatility trigger shifted slightly lower. All right, so another mixed picture for shifts and levels for Nasdaq. And we'll get to setups in a few minutes. Let's wrap up our positional analysis by taking a look at gamma notional. This is market maker's position on the gamma curve at the beginning of the day. I'm going to focus on the S&P 500 and Nasdaq. Note all these numbers are positive. And with the exception of QQQ, they all shifted higher from yesterday. So again, in a positive gamma environment, Spotgamma assumes that traders are short calls, market makers are long calls. Hence the positive gamma, and they have to trade against price to hedge their delta exposure. Gamma notional for SPY up over 1 billion. Let's take a quick look at the Vana model. I'm going to take a look at the Vana model for SPX. So there is some put Vana in play for today. All right, this chart, what this chart is showing is market makers delta notional on the vertical axis, spot price for SPX on the horizontal axis. There are two curves on this chart. The light gray curve shows how market makers delta notional may change with changes in price only. The purple curve adds implied volatility to the equation. That shows how market makers delta notional may change with changes in price and applied volatility. And that change in delta with a change in applied volatility is the Vana effect. Vana is a second order Greek. Well, let's revisit our SPX chart. low for the day. All right, so the high for the day, right around 51.76. Low for the day, right around 36. All right, so let's go back to the Vana model now. All right, high for the day, right around 76. Low for the day, 36. So as price was falling, market makers' delta notional was increasing. And in that case, they have to sell ES futures to hedge their delta exposure. Now, as price is starting to move higher, market makers can buy back their short futures. So in this portion of the Vana model, they are trading with price to hedge their delta exposure. And that's typical of a more negative gamma environment. All right, so it always pays to not only look at the numbers, but the Vana model as well, to get a sense of how market makers may be reacting to changes in price and implied volatility. Let's take a look at a VIX chart. So this morning, as price was falling, VIX was increasing. That's why we look at the purple curve on the Vana model. And now VIX is finally starting to drop. Price increasing, finding support around the lower daily expected move. VIX falling, and market makers can buy back their short futures. Let's go back to ES. All right, Sheena asks, kindly show NDX put call walls again. Numbers are really tiny. The call wall was not shown on the chart. Let's just look at the Nasdaq chart real quick. So there's that 18,000 level, maybe a little bit easier to see on this chart. And again, the call wall is below, so that was not shown on the chart. All right, so let's go back to ES. Now let's move on to execution. All right, so a lot of the thesis today was really based on, my thesis today was based on the reaction to the data at 8:30 a.m. Eastern Time. So all the positioning in the options market that we were just looking at is based on the closing price, overnight data yesterday, so before the data release today. All right, so basically I was looking for lower volatility, more of a trading range based on the higher gamma notional, but then the Vana model is showing that as price is, market makers should be trading in the direction of price. All right, so now let's move on to execution real-time data. So again, everything that we've looked at so far, other than Bookmap, is based on static data that's updated once a day. That's where those levels come from. Spotgamma takes open interest data, applies their algorithms to come up with those levels that I show on my charts. All right, so again, let's move on to execution. So we're going to go now to real-time data. Excuse me, I don't think my mute button is working for my microphone. I hope that, I just had to cough a little bit. All right, sorry about that. All right, so we're going to move on to execution now. So I'm going to first look at what options traders are doing. This is the hero chart in Spotgamma. This is available to Spotgamma subscribers. This chart is for the S&P 500. What it's showing is a combined signal of options trades and market maker hedging activity. Again, for a combined signal of SPX, SPY, XSP, and ES futures, all into one combined signal. The white line is showing price for SPX, and the purple line is showing the hero signal. Again, that's hedging impact real-time options, HIRO, real-time data. A falling hero line indicates traders are taking negative delta positions. They are buying puts and or selling calls. Market makers take the opposite side of those trades and they have to sell futures to hedge their delta exposure. Then a rising hero line indicates traders are taking positive delta positions. They're buying calls and or selling puts. Market makers take the opposite side of those trades and they have to buy futures to hedge their delta exposure. All right, let's zoom in on this chart. So I'm going to focus on the morning session here. And note just a few minutes, maybe 2 or 3 minutes after the cash open, the hero signal shifts lower. During this time, SPX made a little bit of a higher high, leveled off, then started to move lower. So a little bit of a leading indicator, divergent signal by hero there. All right, so let's go to look at the setup in Bookmap. Back to ES. Let's zoom in. All right, so taking a look at order flow here. And I look at any Spotgamma level as potential resistance when tested from below or potential support when tested from above. The volume dots in Bookmap here, let me adjust this chart just a little bit. I'm going to tone down the heat map just a little bit, bump up the volume dots. The volume dots are showing market buy minus sell. Green dots indicate more buyers than sellers. Magenta dots indicate more sellers than buyers. So just a few minutes after the cash open, aggressive buyers move up to the 517 level, then aggressive sellers start to come in as traders are taking negative delta positions, and then price moves lower. You can see all the aggressive sellers on the way down. That's shown by the falling magenta line there in the subchart. That's cumulative volume delta. Also, as price starts to move lower, the yellow line is showing stop orders. Those are sell stop orders. They help to fuel the move lower. A little bit of consolidation at the 514 volatility trigger, and then finally ES breaks below the lower daily expected move for ES. Hello, Stephen. Welcome. Glad you're here. Yeah, a lot of competition at 1 o'clock today. The futures presentation. There's another options presentation. Also, Spotgamma at 1 p.m. So a lot of competition today. All right, so those looks like those webinars are all they've all wrapped up at 2 p.m. So thanks for joining me. Marcellulose asks, isn't it more the dots show orders on the bid versus orders on the ask, that we do not know if it is open or closed? What we know is those are market orders. And the volume dots are showing market buy minus sell. A green dot indicates there are more buyers than sellers, more market buy orders than market sell orders. and just the opposite for the magenta dots. All right, so if you want more detail on that, I suggest attending Bruce's webinar tomorrow morning at 10 a.m. and ask him about that. He may be able to give you more detail. All right, so that is the S&P 500. Short setup this morning, just after the open, as traders were taking negative delta positions, setting up a nice divergent short. All right, let's move on to Nasdaq now. Let's go to Nasdaq. Go back to Hero. All right, so for the Nasdaq, I like to look at this signal. This is the Mag 7 signal. Let me show you what this is. This is another combined signal showing options trades and market maker hedging activity for the stocks known as the Magnificent Seven: Apple, Amazon, Google, Meta, Microsoft, Nvidia, Tesla. These stocks make a very large component of the Nasdaq 100. That's why I like to watch this signal, and they often drive price. All right, so let's zoom in again. We'll take a look at the signal of the morning. And one thing I want to do, I'm going to separate out, put some calls here to give us a little bit more clarity. And actually, let's do that for, I'm going to jump to the S&P 500 to show you what was going on in the morning, the S&P 500. I do this to provide a little bit more clarity. The blue line is showing puts. Falling blue line indicates traders are buying puts. When traders buy puts, market makers sell the puts, and they have to sell futures to hedge their delta exposure. Orange line is showing calls, so they were buying calls, but the put buyers were more aggressive and price moves lower. All right, Antonio says, please make live trading stream. Looking at past is not beautiful. We want to learn how to execute live using Spotgamma and Bookmap. I'll do that at the end of my presentation. I did that yesterday. I put on a trade in Netflix. I'll do this today, but I'm not gonna watch and trade live all this time. My purpose is to teach others how to use Bookmap and Spotgamma to plan and execute trades. So I just can't watch. I don't think it would be interesting to watch me try and find live trades all day. All right, so this is normally how I present, review, and then get to the live market. And also at this time of day, the best trades, I typically trade in the morning from 9:30 to 12. Typically that's the best time for intraday trading. And that's when I trade, and then I'm reviewing trades. And then I will get to the live market. All right, so that's the S&P 500. Let's go back to Mag 7. Zoom in. All right, so for the Mag 7, traders started selling calls before 9:40, shown by the falling orange line. Then just a few minutes later, they started buying puts, both the blue line and orange line moving in the same direction. That's a very powerful directional signal, and price moves lower. All right, let's go back to Nasdaq. Zoom in. All right, so here's the short setup at NDX 150, NQ 400, and QQQ 442. Price breaks below VWAP, that's this light blue line. You can see the aggressive sellers starting to come in Cumulative volume delta shown by the dark blue line that shifts to magenta. Also, sell stop orders fuel the move lower. All right, so excuse me. Traders take negative delta positions in the Mag 7 stocks, and price starts to move lower. Hold on just a second. All right, in Discord, can you hear me? I think seems like I may have lost the stream. Stephen, WRB, can you hear me in Discord? Okay, right. For some reason I'm not seeing it in Discord. All right, Uncle, thank you. Oh, here it is. All right. So that's the short setup in Nasdaq. All right, let's move on and take a look at some stocks. And first of all, let's move on to the stock of the day, which is NVIDIA. All right, Anurag asks, can you speak about the trades that you took, if you would like to share why you took the trades? All right, I did trade NVIDIA short today. I'm not going to share my specific trades. It was a little bit difficult to trade today. NVIDIA is a $900 stock. It moves quite a bit. I would take a short, get profit on my first take profit order, move my stop order down to break even and get stopped out. But this is again the trade of the day. Note that 900 is the call wall, key gamma strike, 875 is the hedge wall, and 870 is the put wall. So NVIDIA moved all the way down from the call wall right after the cash opened down to the put wall. It took a while. Took a little over 2 hours, but finally got down to the put wall. 30-point trade. All right, let's take a look at Hero and see what options traders are doing. All right, so let's go to NVIDIA. Let's zoom in a bit. All right, so it was call sellers that were really driving NVIDIA. Note the alert that came in just a few minutes after the cash open. Price moved up above the call wall, key gamma strike at 900. Traders started selling calls, shown by the falling orange line, and price moved lower. All right, so that is the short in NVIDIA. There were a number of entry points for shorts. If you missed the first, they're at the 885 level. VWAP, multiple short entries again at 885, 880. Then a sharp breakdown down below the 870 put wall. All right, Katatak says, hello, welcome, glad you're here. I've tried to scout based on the Hero signal this afternoon, a lot of fun, insane. Hero gives a great signal, and I tend to look at the trend, the overall trend of Hero, and then I look at Bookmap for entry points. All right, Let's go back to Hero. Oops. Bookmap, Hero. Zoom out. So up until about 1 o'clock, Hero is trending lower. I've got puts and calls separated out. Traders are buying puts. They've started to take the foot off the gas, also selling calls. Now also taking the foot off the gas and prices moving higher. So they've shifted from call sellers to call buyers and put buyers to put sellers right around 120. And prices moving higher. All right, so that's NVIDIA. Let's take a look at AMD. AMD kind of up and down today. Let's zoom in on the morning. So AMD, there was a short this morning, right around 940. Traders started selling calls and buying puts. Then a few minutes later, they started buying calls and selling puts. Price started to move higher. So a short, a long, then right around 1050, the call buyers take their foot off the gas, put sellers take their foot off the gas, and NVIDIA reverses lower. I'm sorry, AMD. All right, so let's go back to Bookmap. Go to AMD. Oh, it looks like I need to add more lines to my chart here. So we're overall bearish for today, for the day. Short from 196. There's the long as traders started buying calls and selling puts, and then they took the foot off the gas. Now AMD is moving lower. Let's go back to Hero. Zoom out. All right, so AMD continues to move lower. Oops. Now Hero reversing higher. Maybe AMD might start to move higher. All right, the next Microsoft. All right, Microsoft was bullish in the morning. Traders were buying calls, selling puts, orange line, blue line moving in the same direction, bullish. Call buyers shifted to call sellers pretty abruptly, and price moved lower. I did take that short. Not a big move, but pretty obvious signal there. Let's go take a look at Microsoft and Bookmap. All right, so again, remember the call buyers become call sellers. Trend break. And Microsoft moves down to VWAP. So good for a couple of points there in Microsoft as the call buyers became call sellers. And thank you, Stephen, for helping out on YouTube. I appreciate it. All right, the next, Tesla. Bearish day in Tesla. Let's see what options traders are doing. Let's go to Tesla. Let's switch to the total signal here. Go to total. I'm going to have to jump, then jump back. All right, so for Tesla, the most clear signal was right in the morning. Reversal at the 170 level. That's the put wall, key gamma strike, and hedge wall, all into one combined level. Initially, for just the first 3 or 4 minutes, traders are taking positive delta positions. Then Hero shifts down, and Tesla reverses. Whoops. Just stick with this. All right, Tesla reverses at the 170 level. That level, the put wall, hedge wall. What was that? The hedge wall, put wall, key gamma strike. Let's see. Yeah, I think that's it. All right, kite attack, way to go. 80% win rate on Nasdaq. All right, so those are the setups that I wanted to talk about. Does anyone have any stocks they want me to take a look at? Let's check on the SP 500. Looks like finding a little bit of resistance at VWAP in the 515 level. Aggressive sellers starting to come in. You can see all the green magenta volume dots. Let's check on Nasdaq. Trading around the QQQ 440 level. All right, let's go to Hero. All right, so what I did yesterday is I showed an example trade in Netflix. Netflix was not very liquid. I actually removed that from my watch list. I removed it from Bookmap. It was difficult to trade. But what I did, I looked at these alerts, and the freshest alert was from Netflix yesterday. The Hero signal was rising. I looked at Bookmap, CVD was rising. There were a lot of green volume dots. So I took a long entry. I showed how to do that in Bookmap. I double clicked twice, so I took 2 longs. I moved my take profit orders. I was filled on the first take profit order. I moved my stop up to break even. And this was a demo trade. This was in a sample trading account, a demo trading account, not live trading. I'm not going to do live trading in a real account. And so after taking profit, I moved my stop up to break even, and then I was stopped out. And of course, a stop order is typically a market order, and did not get a very good fill on that stop order for Netflix. All right, so this is the most recent flow alert for Tesla. So it looks like the Hero signal is trending higher. So let's go take a look at Tesla and see if there's anything there. Let's go back to Bookmap, go back to Tesla. All right, so Hero signal is rising. CVD is still falling. There are a lot of aggressive sellers here. magenta volume dots. So I don't see anything here. I would not take a I do not see a long entry here. All right, Anurag, hello, welcome. Asks, why would you not use the put and call separate signals all the time versus the combination that you use? I switch back and forth. So for example, let's go back to the hero signal for Tesla. So we can look at this. I think it may be simpler for my audience to see the total signal, but we can look at this. All right, so this is showing that traders are not doing much with puts. Put line is flat. They have been buying calls, but in the 5 minutes remaining that I have now, I don't see any long entry in Tesla. So that is the most recent, that's the freshest flow alert. Take a look at Microsoft. Flow alert came in about a half an hour ago. Microsoft has already made a move higher. Let's take a look at NVIDIA. Let's zoom in on this. So no alerts, but traders are selling puts. They have been buying calls. Let's take a look at Bookmap. All right, so I did switch over to my demo account. This was a trade that I took earlier in my demo account. That's a sell at 880. So you can see what I did. Took profit there. Moved my stop to actually just above break even, a little bit above 880. They came out and took out my demo simulated stop order, then moved down to my final target, and then on down to the next target below. So that's what I was talking about earlier, moving my stop to break even. In this case, it was a big profit killer. So let's go back and take a look at Hero. Let's switch to the total signal. I'm going to have to jump back to avoid auto zoom. All right, so it looks like this set up a good longs from right around 120 to 210, something like that. Now the Hero signal is shifting lower. So the question is, is this just a lower high on the Hero signal? Let's go back and take a look. All right, so the long entries. Most recent long entries at 880 long. So that's typically where I like to trade NVIDIA, at these zeros and fives. Short, long. All right, so Antonio, if you're still here, this is typically where I would show live trading in a demo account, in a simulated trading account. Let's go back and take a look at Hero. All right, so it looks like Hero may be shifting higher. All right, I'm going to wrap it up. My time is up. So again, there were a couple of long entries here, then maybe another long. We can try this here. So I picked 50 shares. Zoom in a bit. All right, CVD is pretty flat, still kind of falling. I really wouldn't take this as a live trade, but this is we'll see if this gets filled. All right, so a double click there. Let's go back and check the Hero signal. All right, so this is not a trade recommendation. Looks like the Hero signal may be rolling over. All right, so we'll give it maybe 2 more minutes. 1 more minute. Then I'll wrap it up. Go back to check Hero. Just a reminder, when I'm trading, and I don't like how the Hero signal is turning down there. I'm going to cancel. All right, everyone, I want to thank you for watching. Thank you very much for your questions and comments. Remember, tomorrow is options expiration. For SPX, there are 2 settlements, the AM settlement and the PM settlement. So part of that gamma, that all those calls that I was talking about for SPX, part of those will expire tomorrow morning at the open. That's based on the opening print of all the stocks in the S&P 500. There's also a PM settlement for SPX, and then SPY and QQQ. All right, so again, remember, tomorrow's options expiration, and we'll talk about it tomorrow afternoon. Thanks again. Thanks for your questions and comments. Have a great afternoon, and I will see you tomorrow. Bye. Mm-hmm.